Hi everyone, I welcome you all for another session in webinar series for advanced business reporting subject. Today I am going to take you through LKAS 40 investment properties. That is also one of most important standards in this subject, advanced business reporting. It was tested in most recent one of past papers, that is December 2020 online examination. So I'm planning to discuss the answer for that question. Before discussing that question, I would like to give brief introduction about LKAS 40 investment property. Let me share my slide. Right. Yeah, I hope you can see the slide. Yeah, this is Isuru Manawadu. So I would be discussing LKAS 40 with you, particularly the past paper question. This is the past paper question, December 2020, that is online examination, advanced business reporting, question number 1. Question number 1, right? That question developed on LKAS 40, that is investment property, as I mentioned earlier. Right. First, you need to understand what investment property is. What is the difference between property, plant and equipment and investment property? Right. You should understand the difference clearly. Okay. Because measurement, recognition, there are some differences. Okay. Therefore, we'll understand the differences between those two things. Okay. Before that, I need to open my whiteboard. Let me open my. Yeah, I hope you can see this. Okay. Now, LKAS 40. LKAS 40 investment property. Right. Under investment property, first we need to remove two things. In the scope of LKAS 40, you need to remove two things. What are those two things? The first one is, the biological assets related to agricultural activity. Let me write that one in different color. Biological assets related to agricultural activity, right? That is LKAS 41. LKAS 41, the related standard is LKAS 41. Second one, mineral rights and mineral reserves such as oil, natural gas, etc. So the related standard is SLFRS 6. Right? This is the scope. So these two things would be recognized, measured based on these specific standards, not investment property standard. Right? So these two things eliminated as I mentioned. Okay. So then, other than these two, all investment properties should recognize, measure based on LKAS 40. Then I'm going to define what investment property is. Right? Definition of investment property. Right? Now let me explain that one through an example. Okay? Let's say there is a business called Aralia. In this business, there are many non-current assets. Many non-current assets, or rather I would say property, plant and equipment. Right? Let's assume there is a land, there is a land, okay, there is a land. Then there is this one, you know, there is no such you know, the early entity just purchased and kept, right? No predetermined future use, right? Just they purchased and kept, right? Okay, maybe this one for capital appreciation. Maybe in future the value of this land would going up. Then once the value is going up, then they can sell outside, right? So that is one. There is a land like that, right? There is a land for capital appreciation. Second one, there is another land. There is another land and it has been rented out. Rented out, right? There is another land with building. There is a building as well. There is a building and land. This one they use for let's say production purpose. Production purpose, that means, you know, running the business, administrative purpose. There is a factory as well as administrative premises in the business, right? Land and building. There is another land and building. There is another land and building. There is another land and building. Now this land and building rented out. Rented out, right? Let's assume this particular land, sorry, this particular building, there are around 4 steps. 4 steps, 2 steps we are using for business purpose, another 2 steps rented out, right? Another 2 steps rented out. Okay, the part of this building has been rented out. Okay, then there is another motor vehicle. Another motor vehicle. This motor vehicle or additional motor vehicle, this one also rented out. Rented out, right? Another motor vehicle rented out. Okay, and there is another building, sorry, another land. This land, let's assume we obtain under lease, under lease, under lease. We obtain under lease, right? Okay, we recognize this one as right to use asset, right of use asset, right of use asset. Then we are constructing, now we are constructing a building. Still that is not completed. Still that is not completed. We are constructing a building on this particular land, right to use asset. We are in an agreement or contract between lessor, lessee and lessor. But in this particular land, we are constructing a building. The purpose of constructing this building is renting out. Once we complete the building, we will be renting out, right? Early entity is going to rent this particular building as well, right? Building as well. Okay, right. Now another thing is, now I said here in this particular building, this rented out building, these 2 steps, there is a small place, there is a small place for security guard, for security guard, very small space provided. Even though these 2 steps are rented out, there is a very, very small place used by the entity, for what you call security purpose, right? This portion has not been rented out. That portion used by the entity for security purpose, right? Now you need to, now I have given a scenario. I introduced many assets. Now we'll try to understand what are the investment properties, what are not investment properties, right? So investment properties means land or building or part of building or both, right? Kept for capital appreciation, particular land for capital appreciation or earning rentals, right? Now these lands and buildings we have rented out and we are earning rentals from these lands or buildings, right? If we are collecting rental income from lands and buildings, those assets are recognized or identified as investment properties. Investment properties, right? Now this particular land, so I already told you this land kept for the capital appreciation. So based on the definition, this could be identified as IP, investment property, right? Then this one, no doubt, we rented out, we are earning rental income, so second land also investment property. Then this land and building entity used for the production purpose and administrative purpose. This cannot be used as investment property, not an investment property. This could be identified as property, plant and equipment. Why? We are not earning rentals. We are not earning rentals from this. But here, from these two stories, we are earning rental income. So these two spaces could be identified as investment property, IP. Now this is a very special case. Now this small space, how you are going to recognize this small space as investment property or property, plant, equipment? Standard clearly mentioned the small space also would be, this is insignificant space, no? Compared to this entire two steps, this portion is very insignificant. Therefore, standard clearly mentioned entire premises inclusive of this small premises could be identified as IP, investment property. Now, yes, I hope you understood that. Then this, even though motor vehicles are rented out, it cannot be recognized as investment property. Not investment property. Motor vehicles, generally we are giving motor vehicles in rent, but it cannot be identified as investment property. This should be identified as property, plant and equipment, right? So this one, still we are constructing, still we have not given for rent, but purpose of constructing this building is renting purpose. So as per the standard, this particular building also could be identified as IP, investment property. This land, even though this is, this is also one of assets for RLA entity, right to use asset, right? We are in lease agreement. Yes, no issue. We can recognize them as investment properties. We can recognize for investment properties this particular premises or property would be used for renting purpose. Now, on this particular land, there is a construction. So we are not going to use this particular land for any other purpose. No? So we can think this entire building as well as land on as investment property. But there is a discussion how we are going to measure right to use asset. Right? This right to use asset, generally we are recognized based on recognizing and measuring based on SLFRS 16 leasing standard, right? Leasing standard. In leasing standard, there is a special, based on SLFRS 16, we recognize or measure right to use asset. How? In the previous session, I explained present value of lease payments, then initial direct cost, then down payment. So the collection of these three items could be identified as the cost of right to use asset. Cost of right to use asset. Now in this case, we are going to recognize this land as investment properties. You are allowed to do that, no issue. You are allowed to do that, right? Based on SLFRS 16, this right to use asset could be measured at fair value. In that sense, this right to use asset could measure if entity is using fair value model. If entity is using fair value model for measuring investment property, standard allow you to use fair value model, fair value for right to use asset as well. So I will explain the sections as well, don't worry about it. Right now, I hope you can you could remind the things that you have learned under LKAS 40, right? Then in addition to this, I would like to give you the measurement of investment property. Basically, initial measurement of investment property should be at cost model. Initial measurement of investment property should be at cost, right? Subsequent measurement, you have two models. First one, cost model. Second one, fair value model. If entity chooses fair value model, remember no depreciation. If that is a building, no depreciation. So each and every year, the professional valuers should do the valuation, and valuation change, fair value change should be charged into P&L. Fair value change should charge into P&L. Fair value change should charge into P&L, right? So please keep that in your mind. Okay? So if you need, you can write down. I will give couple of minutes. Please write down if you need. Right. Okay. Now with that explanation, I would like to discuss past paper question. Right? Past paper question, one of most recent past paper questions in advanced business reporting. Let me go to slide. Yeah. Right. This is the past paper. Online examination, advanced business reporting, strategic level, right? So you are given few properties, 4 properties, right? You are given 4 properties. Okay, let me read this first. Ideal Private Limited, IPL, is a real estate company and its financial year ends on 30th June. IPL held the following properties as at 30th June 2020. Now, this is kind of uncommon financial year. So better to write opening date and the closing date. 1st of July 2019 to 30th June 2020. So this is the financial year. Somewhere in corner in your writing book, you could write this financial year, because this is See, 30th June. Financial year ends 30th June, but in Sri Lankan context, the financial year ends generally 31st March or else 31st December. 31st December. Okay, but in this examination paper, you can see some uncommon financial year, right? But don't be panic, right? You can write down starting date of financial year and the closing date of financial year, because you are given some dates. Right? So initially, if you can write that date, then you can take your decisions, right? That's a kind of best practice, okay, to do in your examination. Okay, first one, land in Aturugiriya, land in Gampaha, then building in Panadura, then building under construction in Malambe. Note, we'll read this one. IPL prepares its financial statements using full SLFRSs and measures investment property at fair value. This is important information. Fair value. Land and building classifies as property, plant and equipment are measured at revalued amounts. If they classify as property, plant and equipment, it has been recognized or measured under revaluation model. Right, revaluation model. Now read the required things. Advise the management of IPL on the accounting treatment to be applied for the properties 1 to 4 above as at 30th June 2020. Right, you can obtain 10 marks. You can obtain 10 marks from this question. So this question is very, very easy question, not a difficult question. If you know the standard, but if you don't know the standard, difficult, right? Difficult to earn, right? But you should study the standard and apply. Okay, we'll discuss one by one. Land in Aturugiriya. Right? What do you think? Now I hope you have read this one, right? So if not, you can read with me. You can read with me. Let's see. IPL acquired this land in August 2019. So somewhere inside this financial year for 10 million. That is the cost of the land. 10. The company has not yet decided on how would use this land in the future. The net realizable value as at 30th June 2020 was 13 million. Why? This is real estate. You know what real estate is, right? So they are, they purchase lands and they divide and then they are selling. So these lands could be identified as inventory. For their business, those are inventories. That is ordinary course of business, right? But in this land in Aturugiriya, they don't have clear intention why they have purchased, but they keep that particular land for capital appreciation, it seems, right? Okay, because see, the company has not yet decided on how it could be used in the future. That means capital appreciation. Right? By looking at this, you should understand this is for capital appreciation. So this is one of investment properties. Not inventory. This is investment properties. And fair value as at 30th June 2020 was 13.7. Right? The cost is 10 million. Fair value is 13.7 million. The difference between these two, 3.7, this should be charged into P&L. Right? Because this is an investment property. At the end, 30th June, it should be measured at fair value, 13.7. So initial value 10 million. So difference between these two, it should be charged into P&L 3.7. Right? Very easy, not a difficult task. Shall we write the answer quickly? Let me write the answer. Answer for question number 1, Q1, December 2020. Write down land in Aturugiriya. First one, land in Aturugiriya. Land in Aturugiriya. We'll write it. As per LKAS 40, land held for a currently undetermined future use. Currently undetermined future use is an investment property. Since IPL measures its investment properties, I would use IPL. Since IPL measures its investment properties, at fair value, this land should be measured at the fair value of 13.7 million as at 30th June 2020. Right? Initial measurement should be at 10 million, and fair value change of 3.7 million, fair value change of 3.7 million should be charged to the P&L. So this 3.7 you calculated, 13.7 minus 10. If you need, you can write down that one as well. Yes, moving on. Second land in Gampa. Let me read that. Read this quickly. IPL acquired this land for 30 million with the intention of selling it in the normal course of business. Then no doubt this is inventory, right? Normal course of business, because this is real estate company. So this land has been purchased for the purpose of, with the intention of selling it again. So normal course of business, that's inventory. However, the company is aware that it will take some time for economy to recover from COVID-19 pandemic, and it will be difficult to find buyers to sell the land. Therefore, IPL decided to rent the land to another company as a car park for a short period of time until the land is sold. This is very important. Short period of time, not a long period of time. Right? And ultimately, entity is going to recover money from sales. Right? Renting is for a very short period of time until buyer comes. Right? Now, the fair value of this land as at 30th June 2020 was 34 million and the net realizable value 32 million. 32 NRV 32 million, cost is 30 million. Cost is 30 million. As per LKAS 2, you need to pick lower of cost and net realizable value. Lower of cost and net realizable value. If you decide recognize as inventory, you need to record this one at 30. Right? Now, based on the given information, what do you think? Can you recognize this one? Can you identify this one as investment property? No, you should not. You should not. Why? This particular land has been given for rent for a very short period of time until buyer comes. So this land should not be recognized as an investment property. This land should be recognized as inventory. So this could be measured at 30, cost on net realizable value, whichever is lower, right? Let me go to my whiteboard in order to write the answer. Okay, you also can write the answer. Property intended for sale in ordinary course, in the ordinary course of the business is inventory. Therefore, this land should be reflected. This land should be reflected. This land should be reflected as inventory. And the temporary renting out of the land does not qualify for it to be classified as an investment property. Accordingly, the land should be measured at the cost or net realizable value, whichever cost or net realizable value, whichever is lower. That is 30 million. That is 30 million. Okay. So this is the answer for second property. Let's go to third property. That is a building. Building in Panadura. Okay. Take 1 minute and read quickly. Right. Let me read this. Building in Panadura. This building was acquired in July 2019, that is inside the financial year, at the cost of 20 million. The cost is 20 million. And it had a useful life of 30 years. The building was occupied by 2 tenants. Tenants means the people who take for rent, tenants. under operating leases, right? They are taking under operating lease. Both tenants vacated the property due to decline of their businesses resulting from the distressed economic environment under COVID-19. Therefore, the building was vacant as at 30th June 2020. At the reporting date, closing date, that particular building is vacated. IPL is trying to find new tenants for the building. As at 30th June 2020, the fair value of the building was 22 million. The cost is 20 million. The fair value at the end of the reporting date, 22 million. What do you think? Now, this building is for renting purpose. Even though there are no tenants right now, they are trying to find out. Still, their purpose is to give this particular building under rent. So, therefore, still this particular building could be recognized as investment property. Not property, plant and equipment. Investment property. Yeah, we'll write the answer. Then here, the cost is 20 million, fair value is 22 million. So, difference between these 2 million should be charged into P&L. Right? Okay, we'll write the answer quickly. Third one. This building is held to earn rental income. Even though it has been vacant, since June 2020, the future use is also to earn rental income, and therefore or thus this is an investment property. This building should be recognized or measured at fair value. This building should be measured at fair value of 22 million. 22 million rupees, 22 million. As at 30th June 2020. Fair value change of 2 million should be charged to P&L. Right. Fourth one, last property. Yeah, that's also very easy, not a difficult case study. Building under construction in Malawi. I already told you, even though that is in construction stage, we need to see the purpose of constructing, right? Whether administrative purpose, whether production purpose, or renting purpose. So their intention is to rent it out. So this, even though that is in construction stage, this could be identified as an investment property, right? So let me read this. The cost incurred for construction up to 30th June 2020 was 20 million. So cost is 20 million of this particular property. After construction is completed, IPL will rent this building to a few educational institutions. The fair value of the work completed as at 30th June 2020 was 23 million. Cost is 20 million. Fair value is 23 million. The difference between these two values, 3 million. If you recognize this one as under investment property, this 3 million should be charged into P&L. Okay. Then this building is being constructed on a land obtained under lease for a period of 50 years. IPL prepaid future lease payment amounting to 130 million. What do you mean by that? On 1st of July 2019. 1st of July 2019. Okay. Okay. So in the initial measurement, the value of right to use asset is 130 million, which was the date of commencement of the lease. At that day, they recognize lease asset, that is right to use asset, based on SLFRS 16. Based on SLFRS 16. Right? Then what has happened? Fair value of the leasehold interest as at 30th June 2020 was estimated as 135 million. Fair value of leasehold interest, that means fair value of leasehold asset, land, 135 million. Now the present value of lease payments, that is 130. There is a difference of 5 million. How we are going to treat as per SLFRS 16? Are there any specific section for this? Right? Can you measure now the IP? Now this lease land also could be recognized as if we are going to recognize this particular land as investment property. How we are going to measure it as per SLFRS 16? Right? As per SLFRS 16, now you know this is building is an investment property, no doubt at all. Now we are considering how this particular land is recognized. How this land is recognized. So land, there is no other use. So this building is constructed, then one day that particular building could be rented out. Right? Then land also could be used for that particular purpose. Right? There is no such other purpose for the land. So land also could be identified as investment property. Right? Then you need to understand how we are going to measure it. How we are going to measure it. Since these investment properties of the business is measured at fair value, SLFRS 16 allow you to measure right to use asset at fair value. The fair value changes should charge into P&L. Okay. There is a specific section that is para 34. SLFRS 16 para 34. Right. So this particular thing, SLFRS 16 para 34. You just read it. Please read it. Right, para 34 of the standard. Right, I will show you the standard. I will show you the standard, para 34. Let me show you. Yeah. Other measurement models. If a lease applies the fair value model in LKAS 40 investment property to its investment property, the lessee shall also apply that fair value model to right to use asset. That means the definition of investment property in LKAS 40. So clearly mentioned under SLFRS 16. Clearly mentioned under SLFRS 16. Section 34. Section 34. You just see that. Right? That's why this is, you are facing open book examination. So my advice is to read the standard book and take short notes. Right? You need to highlight important things. Right? In the examination, you don't have enough time to read and see entire thing, because you are given very specific time period. So my advice is before the examination, you need to read and be familiar with the things in the standard book, right? That is one of my advices. Okay, so we'll write the answer here. Yeah, last one. Building under construction in Malambay. As per LKAS 40, as per LKAS 40, the property under construction and intended to be used for earning rental income is an investment property. Therefore, this building is an investment property. This building is an investment property, and it should be measured at fair value of 23 million as at 30th June 2020. The fair value change of 3 million should be charged to the P&L. Then continue in the next para. The land on which the building is constructed meets the definition of investment property, since the property will be used to earn rental income. Right, continuation. Based on para 34 of SLFRS 16, IPL should apply the fair value model to the right to use of assets, rights of use asset, ROUA, right of use asset, rights of use asset, that meets the definition of investment property in LKAS 40. Thus this right of use asset should be measured at fair value of 135 million and fair value change of 5 million should be charged to the P&L. Should be charged to the P&L. Fair value gain. Fair value gain of 5 million should be charged into the P&L. Okay. So that is the answer. That is the answer for question number 1, part A of December 2020 Advanced Business Reporting subject. Right. I hope you have gained some insight on LKAS 40. Let me show you the question that we have discussed, that is December 2020, question number 1, right? I answered and I have written the answer in the whiteboard. So I hope you have written that particular answer and you obtain some understanding, good insight on LKAS 40 with this discussion, right? Okay, I hope you enjoyed the session. Thank you very much.